Boeing's posted a $6 billion loss for its third quarter. The machinists went on strike the last time around back in '08, and that strike lasted close to 8 weeks, cost like $2 billion, they estimate. Today, we look at the stock, and it does have an impact, it would seem, and if it drags on, it could have a bigger impact. As Doug Flynn is here to tell us from Flynn Zito Capital Management, we talk a little money before the closing bell at the top of the hour. What about Boeing and the impact of the strike?
There definitely is an impact if they get their demands for the bonus. Every $1,000 bonus they give out is going to cost them $33 million based on the amount of workers they have. So if they do get a $7,000 bonus like they're looking for, that's almost a $250 million hit right there in a very lump sum, quick fashion. So look, the stock is under pressure. They're losing a ton of money. They have some problems, and they need to get back to work so they can start making money and offset a lot of this. So that's the real issue. I mean, they need to pay their workers properly and the right workers, because you need safety above all else when we're dealing with Boeing products, as we know all too well.
Yeah, we do. So too many stories about that. The doors flying off and all the rest of it. Now,
Exactly.
Stock, you want to talk about stocks? I guess Tesla would be your stock of the day, right? We talked about it when the numbers came out last night or right after the close, right? And then the stock shoots up 20+% today. So this is the best day in a long time for Tesla.
Yeah, it seems like he got the costs under control as he dropped the prices, and now they had an increase in deliveries, and it seems like they're profitable. And I don't know any EV section of another car company that is profitable. So you got to give him credit there. And I think the growth rate, I think that's really what got everybody most excited, is Elon talked about 20 and 30% growth, which is higher than what anyone was anticipating. So hence the pop in the stock price. Now, if that comes to pass, then it's justified. If it doesn't, then things got a little ahead of themselves. So, but everybody loves Tesla. I mean, $10,000 invested 5 years ago is worth 150 grand, even though it hasn't done much until today again after a little while. So
that was a heck of a run.
It goes from here.
That was a heck of a run for some time in that stock. Okay, finally, before we get the bell and get the closing numbers, we talk about the stock market all the time. I want to mention the bond market as well. We can put up the 10-year Treasury yields, the interest rate on the benchmark U.S. government bond, right? So that's well above 4. It's been going up recently. Is there a message in the markets, whether it's the stock or the bond market, about the election that's being sent, or is it simply that there's some nervousness, anxiety about uncertainty? I mean, we're coming up on an election. Seems like markets are nervous. What are you picking up?
Great question. Two things, really. We're first picking up the fact that the economy continues to be stronger than expected. The economic data is too strong for the Fed to cut as aggressively as they want to. So whether that's employment, whether that's wages, there's that. And then you weigh in the fact that the market's starting to pick up that Trump might win. And if you apply Trump winning to that economic message and then layer in, if he gets everything that he wants with all the tariffs at the maximum and deports 20 million people on January 21st, that's going to make interest rates drive up even higher. So there's a little bit of that right now while the market adjusts to that combination. Now, as we've talked about a lot, the percentage of election promises that get through for presidents is about 5% on average. So as the market wraps up and adjusts to that, I think there'll be a relief rally. Things will settle back down. But that's where we are right now.
Some number when you think about it, 5%. Thank you, Doug. Appreciate it.